It's great to be here, Lauren. Thank you.
Yeah, now before we get into all of the details of Kondratieff theory, let's start out by really setting up for our viewers why they need to care. How does this theory help us or you understand, I don't know, investing or saving, or how to read the economic news or figure out what economic news we're likely to see, or policy prescriptions that we should or shouldn't see?
Well, I feel that Kondratieff wave theory is an excellent tool for trying to make sense of these extraordinary financial times that we're living in right now. If you look at the lens of this theory, going back decades and centuries, and understanding these recurring cycles of boom and bust, you get a better sense of where we are in the big picture of things. And I think that's lost upon a lot of people now. Specifically, how this could help you. If you bought into this theory as an investor at the beginning of this economic winter in 2000, you would have been out of stocks and into gold and commodities, and you would have done very well and avoided some of the pain in stocks. Likewise, if you had been, say, a home builder, or in certain industries that overbuilt and had excess capacity, you would have mitigated the worst of that by understanding that you were in the winter cycle phase, and that is not the cycle phase you want to expand too much in. So by understanding where you are in the grand scheme of things, you can help minimize some of the worst pain and also manage your financial affairs better.
Okay, great. You've set that up well. So now you think we're in a Kondratieff winter, which is maybe not what our viewers want to hear, but it probably sounds familiar because it's marked by high volatility, slow to negative growth, delevering by consumers, corporations and governments, hoarding of cash by banks, asset deflation across the board, depressions from bursting credit bubbles. So this all sounds pretty familiar to most people listening, but how can you be so sure we're in a Kondratieff winter?
Well, I think just the very fact that all of these things coexist at once is a great indicator that there's something very different going on here. Now, also, if you look at countries like Spain at 25% unemployment, well, that's what you would expect to see in a depression. And there are many other areas and measures that are all telling you that there's something wrong. There's 60 million people on food stamps. As you said, banks are hoarding cash. They did this in the 30s, too. And there's very much of the same type of things that were happening in the 30s. The only difference being that in this particular cycle, the central banks chose to fight it through quantitative easing, and that's helped stock prices do much better after the initial crash in 2008. But then if you look around the world, you'll see that that China, India, almost nearly every other country except for the U.S. is undergoing a global market crash in slow motion. So there are just so many things out there that tell you that this is an economic winter. We just haven't had yet the final bursting of the bubble yet. Okay,
so let's get to that. Where do you see this cycle going?
Well, if you believe in the Kondratieff theory, as I do, you have basically 4 cycles of 15 to 17 years. And given that the last one, the transition into winter was in early 2000, that would mean that the bottoming out phase of this cycle would be sometime in 2016 to 17. And so you would expect between, coming up maybe later this year or 2013 to 2015, 16, that area would be very difficult. And I think that one reason that you could point to also is that there's a liquidity wall just ahead of us of some $14 trillion of debt that is primarily junk in nature. It's leveraged loans, commercial real estate that's underwater, and even short-term treasury debt that I consider to be junk given our deficits. And all of this has to be rolled over in the next 3 or 4 years. Well, some of it will be, but maybe as much as 20 to 30% won't be, and that would result in several $1 trillion in defaults. And that's what I see happening in the next couple of years, and pretty much is unavoidable. And if that happens, of course, you're going to have economic growth contract sharply, and you're going to have the capital markets fall very much too.
But that would be a good thing in the sense, because doesn't it move us along to the next season?
It sure does. It would remove the excesses of debt that have to be removed. I mean, one of the key central themes of the Kondratieff cycle theory is that the next cycle of economic growth and prosperity cannot begin until the excesses that have been built up into this previous cycle have been removed. Now, we've had some delevering begin in 2000 by individuals, but the sovereign governments have been doing the opposite, relevering, and we just have a long way to go in that process. So I would argue that It's going to be a painful couple of years ahead. But then I would also like to point out that I do believe that once this is done, there are many things in place right now that can assure us a very substantial degree of prosperity in the Kondratieff spring that we expect to happen in a few years.
Okay, so you think we have a few more years of pain to go. We haven't really hit rock bottom. I'm just curious how it fits in. We know central banks are going to do everything they can to try to inflate. We know that probably federal governments are going to try to do the same, at least probably not abruptly stop their spending, at least not in the U.S. So how do we know that that bottom is going to happen with those factors? Is that kind of a wild card, or are you pretty certain that Kondratieff wave and what it says will play out regardless?
Well, the key assumption here is that the markets will settle all this out. And the markets have a way of doing that. You can try to influence them to some degree, but we're going to see that this has actually been a heavyweight battle of world-class proportions that's gone on since 2007, when Bernanke lowered rates to zero, engaged in quantitative easing, and governments across the world, including ours, are running trillion-dollar deficits. So the combination of monetary and fiscal policy has been ganging up against this Kondratieff winter since 2007. But you have to remember, this has happened 4 times in history, and there has never been a Kondratieff winter that's been avoided through the issuance of more credit and debt. So I'm banking on history.
Interesting. Okay, so you're banking on history, but from what I understand, this cycle has gone on longer than others traditionally or throughout history that you're citing. So why do you think this has gone on longer?
I think it's gone on longer primarily because of 2 things. One is that the lifetime span has increased markedly since the beginning of the last cycle, which is about 60, 70 years ago. So I think the average age then was around maybe late 50s, and now it's in the mid 70s. So that, in general, has to push it out some. But also, we have the decisions made by governments and central bank chiefs that have purposely been in denial about this, and they have taken the steps to prolong the curve. So I think that the combination of these 2 things has added 6 to 8 to maybe 10 years to this cycle.
Okay, I see. Now, just to play devil's advocate for a moment,